Alan Porter. Alan, what's going on, man? How are you? And
Well, this is kind of a different type of podcast we're doing today, but I'm doing well here in North Carolina. It's a beautiful day out, 70 degrees.
it's the way to do it, Alan. It's just kind of impromptu. We have the clock. We might have to get you on TikTok live and have you come on and co-host with me. I started doing some TikTok lives. So that's the big thing that's important. You want the whole world to know how you're changing people's lives, don't you, Alan?
Absolutely. Basically, Neil, it's through education because 99% of people I talk to include financial planners, CPAs, and attorneys, have no idea what I'm talking about because I want to teach people to think outside the box, conventional financial planning, and show them how the wealthy and the financial institutions have created wealth over the years and saved on taxes.
You know, I was watching Diary of a CEO, and he had 6 different a roundtable discussion. This is a very popular podcast, really good one for all entrepreneurs to watch. But they had a bunch of different wealth, financial people. One person on Bitcoin, one person on just putting it in the market, and then they talk about some of these people that don't even want to plan for retirement at all. And that's a topic I do want to cover, and that's called sunset retiring. Or they do, but they decide at a certain point they saved up and then they just want to go work another job and leave their job and sunset retire and have $1.5 million in the market. Go figure. It's just so what I have seen in this process is no one is talking about your solution. In that long roundtable discussion, no one talked about the biggest wealth transfer vehicle, which is cash value life insurance. It's like it's a no-brainer. And how you do fixed annuities. They're looking at people who are going to live only to 75. They're still not thinking, Alan, about people who are going to live a lot longer in the next 10 to 20 years with technology changes.
Well, Neil, what kills me is they always say the safe distribution rate is 4%. That's down to 2.8%. You're 65 years, to last for 30 years. Index for inflation, 3%. Well, my retirement plans go to age 120. And that thing with the 4%, that's not even guaranteed. And just like the risk in retirement, a stock portfolio only compounds all the risk in retirement that cash value life insurance, when properly structured, or fixed index annuity, when properly structured, can eliminate or mitigate all the risk in retirement. Sequence returns risk. 99% of people don't even know what this is, but it will devastate your retirement when you go, and this happens. If you have a loss in the market in the first 2 to 3 years of a 10 or 20 year period, as compared to the last 2 to 3 years of a 10 or 20 year period, you're going to be out of money in probably anywhere from the 5th to the 9th year. And I'll give you a perfect example, Neil. Today, we go to retire, you're 65, you got $1 million. You took the 4% distribution rate. You got a 10% loss the first year. Now you're down to 900,000 minus the 40,000 you took out, minus the fees you pay the financial advisor, whether you make money or not. And then what happens in the next couple of years, if we had a market like 2008, where it went down 28 to 52%, people got out of money. They're going to be out of money in the 5th year. The people retired the first part of 2000, from 2000 to 2003, they have sequence return risk, killed them. They couldn't retire in a stock portfolio because they're out of money. Besides that, a 401k only lasts 5 to 7 years. And the problem with 401ks, people have no idea about it. They don't, 58%, Neil, don't even think there's a fee on their 401k. A 1% fee over a 30-year period will reduce your income by 1/3. And the average fee in a 401k, according to Forbes magazine and Lap Times, is 2.99%. Neil, people are going to have less than half of their money, 2/3 less, basically. And then they get hit with taxes anywhere from 25 to over 55%, and they're not prepared for it. Neil, they're not prepared for long-term care. Long-term care right now costs between $50,000 to over $200,000 a year and goes up by 6% every year. You can have long-term care insurance. That's great. But I kind of equate it with term insurance. Now, all insurance is good because it protects the family. But with long-term care insurance, let's say you bought it at age 60, it's very expensive. And you die in your sleep at 75. Well, guess what? All that money's gone. It's just like term life insurance. You can have as much, basically, in term life insurance up to life expectancy as you have in a cash value, properly constructed cash value life insurance policy. But if you live one day past life expectancy, there's no cash value in term life insurance. Now it's great when you're building a family and protecting the family because it's very cheap. But when it comes to retirement, it's a whole different ballgame. And I can't stand these advisors. Well, you're 60 years old now or 65, your kid's gone, you don't need any insurance anymore. They have no idea what they're talking
No.
about. The cash value life insurance, in my opinion, and the opinion of educated advisors, is the greatest tax code approved, tax-free retirement system that's available today. It far defeats anything a stock portfolio or a 401k or IRA will do, because no other product like life insurance. It's not an investment. It's an asset class all of its own. It's been around for hundreds of years. It's the only financial product that paid dividends during the Great Depression. There's no other financial product out there that can provide the protection, the benefits, or the performance of properly constructed life insurance, because we never have a loss due to the market. Okay. We have indexing strategies or fixed assets to grow our cash value. It grows tax deferred. It can even be tax deductible when set up in defined benefit plans. It grows tax deferred. You get your distributions tax free now.
Right.
And what I mean by that, when you get this tax free, it does not affect the taxation of Social Security or the means testing for Medicare Part B, which will be in the thousands of dollars per year. People have no idea about this. And their CPAs and financial planners sure don't tell them about it. And because I've had hundreds of clients, Alan, why hasn't my financial planner or my CPA ever told me about this? And I say, let me ask you a question. When is the last time any of them give you any proactive advice on saving taxes? It's slim to never. And I said, you may have the greatest advisors in the world, but it's what they don't know that's going to end up costing you hundreds of thousands, if not millions of dollars, in undue taxes, fees, and lost opportunity costs. And they all agree. But they say, Alan, what do you mean by lost opportunity costs? I said, what if I could devise a tax strategy that will save you taxes, that will pay for a tax-free retirement for you with a benefit paid for by the government because we're saving the taxes that you normally would have paid? Is that something you like to do? Well, absolutely. How do you do that, Al? Well, it's not how I do it. It's who I know that knows how to do it. They're part of my team. That's why you have to have a team of specialists planning everything that you do, not general practitioners. I mean, Neil, and then the biggest thing, it eliminates or mitigates all the risk in retirement. Sequence return risk. The number one fear of retirement is running out of money before you run out of life. Legislative risk, tax risk, government risk, market risk. The list goes on and on.
Right.
A stock portfolio, money market fund, CDs, mutual funds, ETFs, all they do are compound the risk of retirement. It's a whole different ballgame when you're building up to top retirement. But when you get retirement, the whole ballgame changes.
Yeah.
You have to have a diversification of your assets. Now, I'm not against a stock portfolio, not at all. But you got to find out where your risk tolerance is. I'm very conservative. Now, the big thing too, when it comes to, it's not about return on your money in retirement. It's about distribution of your assets. And with fixed and fixed indexed annuities, when properly structured, perfect example, you got that $1 million stock portfolio, 4% distribution rate, that's $40,000. You'd only need approximately $650,000 for the same $40,000 a year. Neil, that's guaranteed for life.
Yeah.
And even a guaranteed never to lose money to a market downturn, because we use indexing strategies. And when those indexing strategies go up, Neil, you get an increase in income that's locked in every year. People don't know this.
Yeah. Why do you think that financial advisors do not bring this up? Why do you think it's not in the news enough? Yes, you go on TikTok, you might see it. You might see it on fringe platforms. I'm one of the only ones that's not a fringe platform that's putting it out there in so many ways to give the whole truth. Is it because they're so large and that they don't want this information to get out there?
Well, it's my personal opinion that Wall Street is controlled by, SEC is controlled by Wall Street and their what do you call them? Their influencer.
Yeah.
But the thing is, Neil, these people They're supposed to be fiduciaries. Okay. I'm a certified financial fiduciary. They're supposed to be looking out for the best interests of their clients. And if they're not educated on the proper structure of life insurance policies, fixed and fixed index annuities, they're not looking out for the best interests of the clients. And that's what I ask people. I said, are they looking out for your best interest or the best interest for themselves and their companies? Because when you've got money in the market, and you plan to use that for retirement, and your advisor has never told you about the risk of retirement, especially sequence returns risk, is he doing his job as a fiduciary? No. And people need to be held accountable.
Okay. All right. The best place to go is strategicwealthstrategy.com or email him at strategicwealth, the number 0 @gmail.com or 910-551-1046. And the amazing thing is he does not charge for his consultations. And he has a team of professionals. And I'm here to say it. These team of professionals have saved money for me. And it's because of Alan Porter. I appreciate it, Alan. Thanks again.
All right.
That was the Strategic Wealth Strategy podcast.